February highs of a double top resistance. So I'm watching that like a hawk. The S&P 500 is closing out the quarter with a loss, about 4 or 5%. It's the first quarterly loss in 2 years going back to the pandemic. The breadth indicators have also turned positive, turned bullish of late during this recent rally. So we're starting to see good amounts of demand and control looking broadly at the market. And the VIX, the volatility index, has receded from the highs above 30, but they're kind of selling in at a sticky level around 20. So I don't know if we're going to be seeing monster huge swings or, and you wake up in the morning, looking for that cringe. Are the futures, down or up, 100 handles or something like that? It seems like that has gone away, at least for the time being. Again, though, things are very nimble. We've got, a war raging over there in Eastern Europe with Ukraine and Russia. Really don't know where the heck is that going to lead us. We've got, interest rates rising. We have inverted yield curves. We've got tighter monetary policy. We've got earnings coming up. There is a whole host of things. We got GDP that coming off of a strong first quarter at 7% growth. Now we might be looking barely at 1% growth in the quarter that we just finished up here. So very still a messy market is the way I would probably characterize it. So I think we continue to take bullish and bear positions, and I think we continue to stay nimble. So I think that would be kind of the game plan as we move into the second quarter. We also have a midterm election coming up. I know Chris has been talking a lot about that. So the second quarter, tends to be a little bit messy, I think, going into the quarter, even though April is a strong month. So there's a lot of twists and turns and contortions with this market, whether we're looking at cycles or so forth. The good news is we're a little bit more short-sighted here in Profitskimmer, right? We can take in and out of the market positions within days or weeks if we want to. So we don't have to be a mastermind of what we think the market's going to be doing 6 months to a year from now. Just kind of need to stay on top of things in the shorter term. So let's go ahead and take a look at the markets. They are predominantly down on the day. Let's first take a look at the S&P 500, so recovering a little bit from the lows from not too long ago. But here is basically the low, March 14th, March 15th. Incidentally, this is when the Fed, the next day, March 16th, is when they tightened interest rate policy, only a quarter of a point, and we've seen a subsequent rally. The market did manage to get above this downtrend line that I have drawn here. It also crossed above the 50-day moving average. It kind of battled for a couple of days around the 200-day, and then it's come up, and it's now toiling with the double top, as I mentioned here in February 2nd and February 9th. This is very key right here. So it did pop up on the 29th, which was Tuesday, and then the last 2 days it's been weakness. So this could be a little point of short-term resistance. So I'm watching that very keenly. So we'll try to figure out where we go from there. Again, the VIX is hanging around 20 even after that big run. So it was as high as 35. I don't know. I think the market is still, there's so many things that are going around that we're probably going to see probably some intraday moves up and down in the market. I don't know if it's going to be to the extreme volatility that we had in February or so. One other notable observation is this low here, which was February 24th. It was a little bit more than a month ago, about 5 weeks. And that was the actual day of the invasion of Russia into Ukraine. So when they actually invaded was a low. And leading up to that invasion, the market kind of priced that in. It's funny how that kind of works. And we almost have like just a triple bottom here. Very, very tricky. And then we are up 10, 11, 12 sessions out of the past 14. So it's been a little bit tricky with the market. I kind of thought or maybe we're still in that camp that we would come back and maybe retest these lows. We'll have to see if we have to continue with that conviction or change our outlook. But overall, I think we're in a marketplace where there's a lot of dispersions in the market, where we can find winners we can get bullish on and find losers where we can get bearish on, and maybe just balance out the trading until we see a little bit more of the markets calming down. Bobby is saying, I can see the S&P 500 hitting 4,400, then coming back up for another triple top. So 4,400 would take us right down to that 50-day moving average, which would be about a 50% retracement from the peak on Tuesday down to that low. So I was kind of in the camp there. I really thought that maybe around the 200-day we would roll over, and then it took one more leg up. So, there's a lot of folks that are, betting against the market. We have some bearish positions on as well. So, I can see Mr. Market tends to want to go where against where most people are in the consensus. So a lot of folks were, unloading, not putting on bullish positions, maybe taking profits or unloading some risk here. So the market kind of continued to push up. All right. So let's take a look at our positions here. I promised I'd start doing these in the earlier part of the webinars. So our newest position, which we put on exactly a week ago, is actually in a profitable journey here so far, which is very nice. We bought the May 310-300 put spread for about a third of the width, about 340. And we set a 300 downward price target for Home Depot. And we put this on when the stock was trading 315 last week. So the good news is Home Depot is lower, and it's right on the edge of that 300. It's trading 301. The intraday low was 313 cents. So we are 13 cents away from a place that we set our profit target. We got in on March 24th, just a week ago, and that was right here. Let me pull that back right there. So if you happen to miss it, it was a little lower the next day, and then just a few days ago, it traded as high as 321. So we got short when Home Depot was 315. So what I like to say is if you happen to miss a price that you want to get in, typically if you wait a few days, you can probably get in. It's very rare that I pick the absolute best price for us to get in. So it's getting to that point now. I mean, I looked at it just before we got on the webinar, and it's almost a 50% gain, pretty much right on schedule. Let's just take a look at those 310 puts in May. They're about 17.10, and the 300 puts are, let's call it 12. So that's 510. So the spread's 510. We paid 340 for it, right? So that's $170 per profit on a spread. Divide that by the risk of 340, and that is exactly 50%, right? So we're pretty much right on cue. If you want to take profits off now and take your 50% profit after a week, you are welcome to do that. It got a little late in the day, so I'm a little handcuffed. I can't do a couple of things at the same time. So we are on this. We still have 50 days. Hopefully, this isn't the low. Maybe we see some follow through tomorrow or into next week. Maybe we make more. Who knows? But it certainly looks pretty ugly. So I think we got this one right. So as of so far. So if we certainly see another swoosh down, probably would be prudent to go ahead and lock that one down, considering there's still 50 days until May expiration. Bobby says the next stop for Home Depot is much lower if it cracks 300 support. Yeah, no kidding. Yeah, I mean, that's another thing. Maybe we just sit tight and just see if it does break down, because what do we know about the vertical spread, right? It's a directionally based strategy. So if it does dive down another 10 or 15 bucks, that spread's going to expand. Maybe we don't want to be piggish. We still have plenty of time. Heck, it could come back up to 320 and back down to 300 4 times before May expiration. That's the kind of the beauty of the vertical spread. So, we'll see where that takes us. So that is Home Depot. So I'm glad that one is going in a favorable position, because the other ones are not cooperating as well as Home Depot. Let's talk about the other May position. So remember, we still have 50 days until May expiration. So we have another bear trade in T-Mobile. We've been in this since a little bit longer, March 11th, about 3 weeks or so. And we are short T-Mobile. We want it to go down. And we're along the May 125, 115 put spread. Paying about a third of the width again, 350. I have it as a hold for now and actionable. So we would like to see it go lower. It really hasn't gone down as quickly as we'd like it to. Let's see, we are 311, puts us right here. So we shorted the stock when it was trading 126.10. All right. And then it traded up to as high as 129.50. Then it came down as low as 123. So that put the spread about $2 in the money. Okay, we're looking for 115. If we can get 115, that would be fabulous. Kind of came back up, and it's a little bit. It's double topping, I guess, that previous high right around there, and it's up today. So the computer programs are buying. Maybe they're thinking it's a flight to quality. I don't know. But this is a stock that peaked out way back here in July of last year. And what we're looking for to do is roll down and doesn't have to come all the way down to where it was back here in January at 100. We're kind of looking for it to come down to 115. So if it just gets to 120, that spread has to be worth at least 5. So that would also bring in about a 50% return as well. So I'm inclined to go ahead and hang on to that for now. And it's also actionable. It's a little cheaper. So let's see, 380 for the 125s. The 115s, let's say they are worth 145. So the spread's like 235, 240. We are in at 340. So it's about $1 cheaper. So if you want to participate on this trade, you can do so at a little bit of a better price. So that's our May positions in Profit Skimmer. I'm also going to be looking to add new positions. So, if we can take profits in Home Depot, we'd be left with a bear position in May with T-Mobile. The other two are April. So we've got about 2 weeks to go. 2 weeks from today is actually April expiration. The next day, Friday the 15th, is a Good Friday, and the markets are closed. So this is one of those rare occasions where the expiration cycle ends on a Thursday instead of a Friday. So we got 2 weeks, and we're really going to need some help. Let's first talk about Square. So we opened this on March 17th, another bear position, and kind of ran into that rally a little bit. And a lot of the tech stocks actually have been leading with strength, even though a lot of these stocks are weak. They are rebounding. So if we do see some rollover and we see that prevailing trend happen again, where we see pressure, these stocks can come down very quickly. I have it as a hold for Square. It's kind of moved against us in a way where I'm probably not so happy about it, where I'm not saying it's actionable. The spread is worth about $1.50. It's a $15 wide spread, by the way, not a 10. So that's why I'm inclined to hold it. There's a lot of profit potential if it does come back in for us. Remember, the market is still, I think, on eggshells, especially all those things I mentioned, what's going on. So this market can turn on a dime. I think it's still in a vulnerable position. So, but it hasn't really gone our way. since we put this position on. So let's take a look at Square. Stock trading 137.5. I think the spread's worth about $1.50. We paid $4.90 for a $15 wide spread. I was looking at it back here in February 28th, and went up to its 50-day moving average and sold off. Came all the way down to 100. And then I was like watching. I was like, all right, well, if we see some strength back in it, this is one that I would like to get short. And we did so on March 17th, right here. So it came right back up to that. And I was thinking that this double top would be a good spot to initiate a short position, especially with the market. But the market bottomed actually on 315 right here on this low. And I wasn't really anticipating that the market would continue to rise past, if I go back again, past either the 50 to 200 day, and now it's made another leg higher. So if it does stall here and we do see the market pull back, I would think Square with the beta of the market is probably going to come back in. But, we do need it to come in substantially now from where it's trading out, 137. We're in the 120, 105, but it can get down. It was just at 95 on March 14th, 2 weeks ago. So there's 2 weeks to go to expiration, and we only need this thing. Well, the goal is to get it down to 105. The break even's 115. So we don't even need to get it that far for this spread to expand to a triple from 150 to 5. So especially if the market gets hit. So probably a good thing would be this thing sells off and breaks this level right here, which was resistance. Now it's probably considered short-term support. And that's 129, about $8 from here. So I have this as a hold. All right. So we take a look at those April options to expire 2 weeks from today. The 120s are worth about $1.80 still, and the 105s are 40 cents. So again, it's about $1.50 on that spread. Just to look, what are the chances of, block or square, whatever you want to call it, that is at 115 or lower. So that would put the spread at 5 or better. We can look at the delta, and the delta is 11. So there's an 11% chance that block will be at 115 or lower at expiration. We're in the 120s as our long strike. I was just showing you what the chances of it being 115 or lower. So that would put the spread worth at least 5. And it's triple from here. So from a risk-reward standpoint, we paid a third of the width. Now it's like a 15% or 12%. So we've got kind of a lot of chips already on the table. There's not much more that we can lose. So the last thing you want to do is take this thing off for $1.10 or so, or $1.20, and then the stock craps out and that spread goes to 10, and then you're going to pull your hair out. So that's why I like to build in my stops on all the trades, because we have 2 weeks of time, and that's very, very valuable as part of the risk that we put into these trades. So you can see that the stock, I would say short term, it's rising, but you can see that it's in a pretty nasty downturn. So even after it gapped up from being as low as 82, it traded all the way up to 132, and then it sold off again, right? So it doesn't take much. The momentum-oriented stocks, if they do roll over, the machines will go crazy, the bids dry up, and the stock will just fall off a cliff. So that is Square. Also, by the way, if Square does not go down, right, both options would expire worthless. There's no action that would be needed. The good news is we're going to be back together in 2 weeks on that expiration on Thursday. So if you're unsure what to do, or if this thing comes back into play, we'll be here. We can actually talk about exits and so forth right off the bat with an hour to go before the market closes. Rick saying, what do you see in T-Mobile that is most bearish? Well, one, it's in a longer-term negative downtrend, and another thing in the shorter term, the stock has been kind of moving up, so forth, and just looking at like the RSI, it's kind of been putting in a negative divergence. So kind of looking at that as some bearish technicals. So over the longer term, it's way off its highs, but we're more interested more of the shorter term. So when we got into this on March 11th, it was right here. So just kind of playing some near-term weakness in a longer-term downtrend, and it's just kind of poked its head up a little bit. So a few of these days right here, if the resumption of this longer-term negative trend should hopefully take us down into this zone. All right. And then our other position right now, and then we initiated this back in February, right ahead of the Ukraine invasion. We got caught in that leg of the bear market, and semiconductors started to turn weak, and Qualcomm is just not recovering. And this one's pretty much going into the gutter. The spread is worth about 50 cents or so. And still, you can't sell it out for 50 cents. It's just something happens, anything can happen. Qualcomm, can move very quickly.